Oh, baby. We got some big earnings reports to talk about today. You already know it, so we'll be talking about first a little bit of Netflix. This one I was kind of scared for. I can't lie to you. If you look back at my earnings reports to watch video, I was kind of scared for this one because I had a bad feeling that things would go wrong despite there being really no reason for it to go wrong. I mean, this is an ideal quarter for Netflix to strive. And I had a really bad feeling they wouldn't do well. So before looking into the numbers, obviously, seeing the stock down probably means one thing to me. It means they did not hit their subscriber growth goals and they didn't hit the guidance. I mean, it can't be down that big if it's not for the subscriber numbers. Subscriber numbers are what's carrying this stock right now, so that they didn't hit it. That's what's causing it to be down 5.8%. Not good, and down 1% when the market was up today. So let's look at these numbers real quick. See if we can diagnose this. GAAP EPS of $1.74 misses by 39 cents. Definitely not beautiful numbers, I can't lie. Revenue, though, pretty nice. Up 22.7% year over year, $6.44 billion. Net adds of 2.2 million compared to 2.5 million guidance. So there's still a good number of ads, I mean, all things considered, and they're expecting overall a 20% increase year over year in terms of guidance for next quarter, which is, I mean, all things considered, adding 6 million it's quite a good number that they're expecting for guidance. So I don't think that's necessarily the issue, but obviously net ads down by 0.3 million. Not an incredible miss, all things considered, but we'll see and look into the more details here potentially. So last quarter the company forecasted just 2.5 million, which was low already. 2.5 million is obviously it's a low number as far as expectations for Netflix. I mean, they usually are putting up 5 million. So obviously guidance was 5 million originally by Wall Street expectations, and they said it's only going to be 2.5. So that already was wild to see, and then they didn't even hit that. Growth has slowed, and it's not unexpected when you see that large quantity. When you're close to the 200 million mark, I mean, you limit really your growth potential there. I mean, it's hard to necessarily see massive growth once you get to a very high number like that. Average streaming paid memberships were up 25%, and streaming average revenue per user fell 1.6% from last year, which isn't obviously a good sign. But see that revenue rose sharply, 23%. Nice stuff to see there. Operating income rose to 1.3 billion, which is good. Operating margin 20.4%. Versus last year's 18.7. Good growth in terms of that, but was down from Q2. Diluted EPS was up 18% year over year, but was lower than expectations. I don't see too much wrong with that. Growth in EPS is big for this company. Obviously, it used to be a money loser big time, so to see them making profit, it's good in that aspect. I'm okay with it. Free cash flow rose to a record 1.145 billion, and we'll look at the balance sheet obviously as we go. Expecting 6 million global subscribers to bring the company to 201.15 million. Not a crazy number. Typically, I would assume Wall Street's going to expect more than a 6 million growth for them. Hopefully, they can hit it, obviously, for the sake of the stock, because it could get pretty rough if they don't hit that one as well. As far as the press release, there's nothing too crazy on this one, all things considered. I mean, look at this. Nothing crazy. Tiny press release. That's what Netflix does. They're better at full year ones, rather than this weak little press release. So, nothing really crazy. You see year over year growth in terms of revenue. They say it's shrinking. You can tell it's shrinking, but again, kind of the law of large numbers. As you get higher in terms of that revenue, it's hard to grow at such rapid rates. You see a shrinking percentage gain there. Operating margin, though, showing some positive results there. Pretty good on that aspect. Net income, you see it's rising. It's good to see on that aspect. EPS rising. So there's good things to see here. As far as subscriber growth, really it's been pretty consistent there. around the 20, a little bit over 20% for each quarter. So pretty good, all things in that aspect. Can't be upset with that. But obviously we want to look at the financials, and they put it on a Excel document. So we'll make it happen. Obviously, we'll survive. But except for these garbage things here. So overall, I'm hoping it's not cut off on the left-hand side, but I really feel like it might be. Something about me just feels like it's cut off on the left side, right? So I'm really hopeful that it doesn't end up that way, but I have a bad feeling it might be. All things considered, though, we'll still take a look and see what we have. Total current assets on this company, I'll have highlighted for you. I can highlight it easier because it's Excel. So this is a full-on balance sheet. And you can see the change here. I typically like to see year over year, so we're going to be comparing your September to your September. So we're going to see the ones highlighted here. September of last year, they had $5.3 billion in total current assets. Now they have $9.8. Quite a massive growth there. Then you take a look at the difference in total assets in general. Pretty massive, all things considered. 30.9 now turns into 38.6. My concern obviously is in terms of debt, so we'll see how that looks for this company. Looks like they transitioned from 7.2 billion to 7.9. Actually pretty good. I mean, you're talking about total current assets now outweigh the total liabilities in terms of total current liabilities. That's crazy for this company. I mean, that's a big hurdle to overtake. I'm curious on full, total liabilities as a whole. We'll see how that looks, which looks like 24 billion from last year. Now it's at 28.2. So, all things considered, growing the debt only by $4 billion, but assets grew by a solid over $7 billion year over year. That's big growth. I mean, I'm proud of them for that. It's good stuff. The stock's transitioning there. Balance sheet's growing in general. Stockholder equity is now at $10.3 billion. Pretty nice. I mean, that's a good balance sheet for this company. I got to give them credit. Give them credit where credit's due. I'm pretty happy for them. So, this thing's obviously turning into a cash generation beast. Can't deny it on that aspect. We're a big fan of cash generation. As far as the stock as a whole, again, I don't like the valuation still. As you talk about slowing growth, and I think the stock will be impacted as such. I don't know if it's halted trading or what just happened. Oh, no, it's back. It was just Google being weird. Down 6%. I think it's a deserved down 6% if I'm being blatantly honest. I think the valuation is just a little bit too high for this stock right now. But, I don't know. I'm not into the buying mood for this one, but, good luck for anyone that's in Netflix. I've missed out on some gains. I can't lie to you, but, I've made other gains somewhere. So, hope you enjoyed.